Wednesday, February 8th, 06:57 a.m. New York time. Good morning. Just a brief top down on the energy sector of commodities. We'll look at the crude oil as well as natural gas. They're on the futures market. Top down, going from the higher time frame monthly, weekly in the middle, and daily in the left. For the monthly candle, obviously not done yet. We're currently in this month of February. We're in a consolidation. Yeah, the candle's currently red, above $75 a barrel. Look at this. Do you see something familiar with all three of these candles? There's several things. They're all above $75. They tested below $75. This red horizontal line for 75. They tested it. Buyers are coming in there. Demand zone. Buyers. The prior months here. Look at these huge wicks on the bottom. Small bodies. More buying. Stepping in there. Defending hold of the pricing. I mentioned several weeks ago that I'm bullish buyers. Crude oil think it's going to go higher. Good chance it's going to get over $100. I'm not saying today, tomorrow, next week, no. But certainly going to be doing bullish strategies on these pullbacks. This is the low of last year, right there. That's the high of last year. Looking at the weekly chart, well, today's Wednesday, almost halfway through the week. We're green for the week. Yeah, we made a lower low. And now we're above midpoint of last week. We also, again, tested this demand zone of buyers, and buyers stepped in and bought it again. Higher lows. And daily, as expected, when we did the reversal down here, because again, this red candle came into a supply zone. Came into demand zone, buyers defended it. And then that day, again, big wick on the bottom. In that, I'll zoom out. You can see there's a wedge. That dotted blue line was from the daily. And that bottom blue line was off the weekly. So you saw they're defending it. Reversed, went into that supply zone as expected. And today we broke above it. Again, daily candle hasn't closed yet, but again, extremely bullish. Good job that you've been following that, what I've been sharing for the bullish strategy. I already closed this morning. The upside, it continues. This is one of the areas. We'll see if it goes all the way up to the top of this coil. Yep. Just by, again, looking at the weekly. Low, higher low, tested at buyers. Let's go look at another energy commodity, natural gas. Look, it's the opposite. It made a new low. Again, the monthly candle's not done. Small low trading range. It's trading below the low of last year. Below the prior month. Yep. Huge sell-off. Natural gas. On the weekly, it's an inside candle. That's going to be interesting. Small trading range, too. Possible reversal. Yeah, if it's a reversal, I'll be trading bullish. Let's zoom out a little bit and see where these prior. Yep, these were swing lows back 2 years ago. We're testing that first one right there. Let me remove that. Let's go to the daily. There we are on the daily. I'm going to remove that one too. So there's already been a reversal. Again, this candle's right now open because the futures are open. Wednesday, Tuesday, Monday. Monday, inside candle, indecision, breakout. Maybe it's a trade opportunity to be trading bullish. Bullish what? Well, if you don't want to do the natural gas futures, nor options on the natural gas futures, stock ETF, UNG. Right there. You'd be buying the stock. You'd be selling put options. Again, put this on a monthly. We're near record lows. This is max going all the way back to 2007. The commodity. It's not a company. It's not going out of business tomorrow. There's a necessary for the commodity, a need for the commodity. Yep. So let's go back to the futures on the weekly. Yep. Again, this won't close till Friday. Again, one could either sit on hands, wait for something to occur there, or you can start testing the waters now. Put this back on a daily. And just buy one share, not two. If you can't handle one share, don't scale up. Just test the waters, one share. But what's better than buying one share? Not necessarily better. What's even a higher probability of success? Well, selling one put option. Yep, selling one put option. Let's cue this in. With the stock ETF right there. Look at the option chain. Go out somewhere like close to 45 days right there. 24 March, 44 trading days. Remember, this won't open until 9:30 this morning. 887 it closed at. Let's look at open up the option chain. Look at the strikes below the last price. So that would be below. So I have to look at the 8 right there. The 8 strike. 8 put strike. You can sell the put and receive, or the 8. You see $56 per contract. So what does that mean? Well, simply means that the stock's higher. If the stock stays above $8, and if you stay in the trade to the option expiration, you'll keep that whole $57. Plus, if the stock, you would buy the stock right now, if it was open at that price, you'd be paying that market price, $8.87. If the stock, you sell the put option and goes down to that strike price, $8, you'll have the stock deliver to you at $8, which still be lower price than that. Yep. And then once you have the stock, what do? Well, good strategy is to be selling call options against it. If you buy it at 8, then if you don't want to hold on to the stock, then go on the call side and you sell a call strike again further out with a strike above it, 859, and then you collect money. Versus crude oil, yep, I want to be necessarily doing the inverse on that because it's looking bullish. Well, you want to see what the underlining is for that. Again, natural gas, 887. Let's put in the stock ETF for USO. For crude oil. The stock ETF is USO, 67.76 per share. Same thing. You can look here if you're bullish, you want to do that. Right there. 24 March, 44 trading days. Let's look at the nearest 67.50 right there. If you want to sell that put option, collect $289 per contract. If you want to take lower risk, you go to a lower strike. And then, of course, you collect lower money. You go even further down if I want. Yep. So if I want to go all the way down to, still collect $100-something, go down to the 61.50 contract, strike price, 61.50 strike price on the puts, collect 130. Again, stock ETF doesn't open until 9:30. Just several strategies you could consider as swing trades. So best of luck. And again, consider testing the waters with one stock ETF, one share, just one share. Don't scale up. If you can't manage that one share or one contract, why would you scale up? Keep in paper trade, but I recommend you put some skin in the game. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.